What's up, guys? JJ Fade 23. How's it going? Gonna go over my trade from today. Day two gap up, which is one of my favorite setups in all of trading. I don't know if you guys follow me on Twitter, JJ Fade 23. I love day two gap ups. Anytime stock can gap up for a second day, or even more third day, whatever, fourth day, it's my favorite setup. One of my favorite setups, I should say. Why is that? Now, first I want to say a couple things. This was an IPO. As you see on the daily chart, you only have 2 days. So it was a recent IPO. Those aren't my favorite. Those aren't my favorite because there's no chart history, no resistance, or no anything. But at the end of the day, the setup for these 2 days is still the same. And now, what that setup is a big, huge volume day one that pushes this thing really strong, gets it very, very far extended. That thing ran yesterday from the open to, where was it? Oh, I can't see with that right there. Hold on. Let me do it this way. That was, 85, we'll call it, 115. So, 85. Sorry, one sec, guys. I can't see when the thing's so close to the screen like that. That was like a 35% move, which wasn't huge. It's just an expensive stock, so obviously the percent gain isn't that great. But that's besides the point. So today now, we gap up. Guys, look at this. Also, you can't see my EMAs on here that I use a lot. Right here, it's only 2 days. The baby blue line right there is the daily 4. You guys, some of you guys have heard me talk about this a million times on other channels. I mean, on other videos. When stocks come off the daily 4, they come back to it. It doesn't matter what time frame, right? Let's go look at the hourly chart. It comes off the daily 4, it comes back to it. The hourly. Look, it comes off the 10-minute 4, it comes back to it. See, it tracks such a tight. It's such a short-term EMA that when it comes off it comes back to it. Comes off it comes back to it. Super fast. Whether it's the 5-minute chart, the 10-minute chart, the hourly chart, the daily chart, it comes back to it that day or the next almost every time. You switch to the 5-minute chart. Look, goes up. As soon as there's a gap off of the 4, it comes back to it. Right? Goes up off the 4, comes back to it. Goes up off the 4, comes back to it. So I use this a lot to know, okay, at the beginning of the day, we're gapping up. In pre-market, where I entered was, sorry, let me bring that chart back up. Oh, I X'd out of Twitter like an idiot. In pre-market, where I entered, you guys, we were, I think, hold on. We were up at the 140s, right? 142. So you see this? Guys, pre-market, we're up here in the 140s. Also, I knew we had 150 psych level above, which is usually hard to break, big half dollar low. So now look at this up here. Imagine up here. Look at how big this gap is to previous day high, which I usually use as my first target. My targets are always going to be previous day high and then the 4 EMA on the daily chart. So we're gapping up this giant gap. There's a very, very, very small chance that this stock's going to open and spike huge and not just come back down and fill that gap. You barely ever see things like this on a daily chart, you guys. Huge green candle, right? You don't see this very often. Day 1, huge green candle. Then day 2 with a massive gap that's going to go like this. And then close at its highs again. Another huge. It just doesn't usually happen. It doesn't usually happen where it closes at its highs. What you usually get is an open, either just dump back to the gap fill, and then you might get a bottom tail like this, and it can continue higher later. You know, this might happen. It might make a bottom tail and continue higher later, but I'm already out of my trade by then. What do I care? But most of the time, what you get is what you see right here. It's a big gap. It pops. It tries to push, but it's so far off the previous day high, so far off the daily 4, that it just fails and comes back down through the open and ends up dumping and filling the whole gap. So that being said, the extension off of previous day high and the daily 4, really big visual gap, percent gap on smaller caps that are like cheaper stocks. So I look for bigger gaps, 50, 100%. But on these more expensive ones, I just want to see a visually big gap, something that looks not good in the chart. I can't imagine it staying like this without filling some. So now how do we trade it? Well, first of all, I always keep the 10-minute charts up with the pre-market data off so I can see when we come back to the 10-minute 21, because that's a good place to lock some in too. Happens a lot. But in pre-market, we have the pre-market data on, so we can see what we're doing. Now, what I like to do, you guys, is I don't want to try to guess the top in pre-market over here, or definitely not after hours, but even over here, I don't want to guess the top. I want to see it start to fall, show some selling, and then I want to short the lower high. Now we had 150 here, which I love. I love when you have giant whole psych round and a half dollar, whole dollar psych levels to act as defense for you, act as resistance, especially on an IPO that doesn't have any real resistance on the daily chart. So early in the morning, it starts to dump. I didn't love the fact that it came back to the previous day high because it really already hit your target in pre-market. But that doesn't, guys, that makes it just a little less A plus for me because it still has to do the same pattern on the daily chart. Even though it touched the pre-market high, even though it touched the previous day high in pre-market, the daily chart is still showing a huge gap because you don't see that pre-market action on the daily chart. So it has to do that during the open to make the setup. So now we have a top at 150. We have a swing high right here. All I do was put my fibs on. Now I know we started to sell. Now I'm waiting for it to come back up into my zone that I always tell everybody, lower high position, 61 fib plus. Usually ends up in this zone, somewhere in between the 61 and 78% fib. So as you can see, guys, as you can see right here, I started taking some starter right here. And then when we got this right here, guys, when we got this little fake breakout right here, when this high went over this high, passed over, fell back below, that's when I added. Because that's a fake breakout of a intraday high. So I added right after it started to break down from there. And now I'm at like half size just waiting for the open. Now at open, I either want to push back up to here, close to 150 so I can get really nice risk reward, or give me a stuff trigger, which is exactly what it did. Number one, we had this high right here that we already marked off, right? And this high right here. And it literally went right up to these two highs. And this right here, my friends, is a giant stuff trigger. And as you can see, I don't just short while it's going up. What if I just add full size right here and I just blast through? No. As you can see, guys, I hit the trigger. As soon as I see the 1 minute stuff candle, boom, now I'm full size and then scaling out into my targets right here, stuff trigger, Trigonomics 101. If you add your overall thesis, your playbook, right? This is a day 2 gap up in my playbook. Everybody knows my playbook that's in my group, right? This is a day 2 gap up. So it's like you go right to the playbook and you know exactly what you're doing, right? Guys, you know exactly how to trade it because you traded them a million times. So, it's just, they're all the same, you guys. Day 2 gap up. You go to it and you find the setups and they all look the same, right? And I wait for a top out, lower high position to short, take it back to previous day high. I have hundreds of these. So now I'm just sitting here prepared. Okay, if we come back into low high position, we get a trigger, I'm going to be full size and I'm going to aim for my targets. No, nothing else to do about it. I don't have to think about it. I don't have to do anything. Do you know how many examples of these that I have, guys? Oops, one sec. In my, guys, they all look the same. Look, what the fudge? You go back to even game, right? AMC. Look at AMC. Giant day 2 gap up, way off the daily 4, way off the previous day high. Starts to top out in pre-market, goes back up into low high position, start to short, aim for the targets, right? It's, guys, this is not, some of these I saved charts like after it was already done, so I didn't have my executions, but you see, same idea. It tops out, look, huge gap up way off the daily 4. That one was into a nice pivot. Huge gap up on a day 2. Starts to top out in pre-market. Pops back up to lower high position. Boom. Right? So it's not like, guys, when you have it, already know exactly what you're doing. Right? You already know exactly what you're doing. Day 2 gap up way off the daily 4 into a pivot. Big extension. This one traded a little different. So, it kind of ended up halting down there. But basically, you just want to save your charts so you know exactly what you're doing. You're trading the same setup over and over again, and it gets it becomes a little easy. The other thing I wanted to say to you guys too was the volume on this off the open was pretty light, so I wasn't like, I was getting ready. Usually when stocks are pushing off the open like this, volume's not very high. It doesn't last long. Sometimes you get those scammy ones that super low volume and they just keep floating higher, but for the most part, that was a pretty basic playbook setup that I love. So, there's not really a lot to it. It's just, the daily four, the big gap off the previous day high. So you have dollars, you have big range for your targets, and then you're just waiting for low high position to get good risk reward, and you just smash it. Set your stops, don't cover like a kitty cat, and have a good weekend, everybody. Thank you.